Hello and welcome to a tutorial on how to trade the DAX. Now I'm going to take you through how I set up for the day and how I put my levels on my chart and basically analyze the markets before the London Open. So when all the institutions and big traders are active in the market, really getting that volatility at the open, particularly the first sort of 5 minutes is a really opportunistic time to get into the market. So first of all, I open up my data feed and download the data, and then it sends to AMI Broker. And then what I do is basically click on the most recent daily candle. It has my details up there. It kind of cuts it off. That's a bit better there. Now, all I do is basically just take the high, low, and close. And I've got a script which I just type those numbers in to the MT5 platform. So 16,490, which is the high, the low price, which is 16,336, and then the close price, which is 16,469. Now I could run that up obviously to 16,470, but it's okay where it is. It shouldn't make too much of a difference. And as always, it's not a finite science when it comes to trading. It's really about the market. Sometimes there's some overflow. It's not a mathematical equation as such that it's going to be exact, and that's why you go into a little bit of drawdown from time to time on each trade, because you're not getting in at the exact order. So anyway, I've hit OK on the script, and it's plotted the lines just for the day only. So I can see that the previous day I didn't actually trade, but back here I see that it stops. It doesn't just keep going horizontally forever. That's because of the way the script is set up. So it's very handy. It just makes it nice and clean, and you can actually go back and see what happened previously on other days. So anyway, the lines are plotted. I basically do the same process for the FTSE or the UK 100, and what I can see is we've gotten a very efficient kind of setup, because we're opening, or at the moment we're sitting right on the close. Now the close, if it's not opening or it's not sitting on the close level at the start of the new day, there's some sort of an inefficiency there. From open to close, something's changed, or the market's drifted away from it, and often the market will look to close that gap, or basically come up or go down and touch the close from the previous day. Otherwise it becomes an unfilled gap, which can present as a target in future trading days. Now, when I plot these lines, I basically want to look for consistencies and where the lines are kind of pushed together tightly. Up here, it's very spread out. So if it gets to here, it could easily get to here or here. Whereas down here on the S1 and the breakout, it's a little bit more tight. So while it could touch here and here, it's more likely to turn around on these levels because they're a bit closer together. There's a bit more strength behind both of them compared to these ones which are spread out. So you don't know what one is actually going to help it turn around. Just like down here, but either one, and because they're close together, they might together turn the market back around. So obviously you can have a tighter stop. If you got in the breakout, you might put your stop below the S1, for example. Whereas up here, you might have to have your stop up above the R2. So it just becomes a bit riskier in the sense of you might have to hold the trade longer before it reacts how you're expecting. Now, just having a look at how the market's kind of playing out as well. It's kind of curved down and then back up along this pivot line. So what that tells me is there is some sort of volume and happy trading in this price area. So what could happen is we could come here and then bounce off, but the ideal situation is that we would get a bit more movement and perhaps start to see the resistance, the support building up around these levels to then turn back around and turn up. Because if we turn here, while we've got the price kind of stabilizing, our stop loss would probably have to be down here somewhere, because we still might always hit a bit lower, and it's just not much movement, like if we buy it here, it might just be a very small trading day, whereas the ideal situation is we get a big strong movement in a particular direction, and we want to retrace it back the other way for as many points as we can get out of the market. So at the end of the day, though, the market is the market. You can't control a bigger day or a smaller day. It is what it is. So if you do see the rejection around this level, you've kind of got some reasoning as to why that's happening. Whereas if it kind of happens in no man's land, just in the middle, in between here, you don't really have much of a leg to stand on in terms of where to get in. So dropping back to some of the other days to try and find where the markets are quite happy to trade. You've got some points here that could be significant. This pivot has kind of held even the previous trading day, that kind of level. Even back here, it's kind of held some sway in the market. One thing I do look at as well is the larger time frame. So over here on the EMI broker, you can see that we've kind of touched up on the all-time highs, and that's a Bollinger Band. We're getting very close to that. And what happens when we hit these kind of levels here and here, the market turns back down. So wanting to be very aware and very conscious that if we do get a nice push up, especially if it's a bit of a spike that's not necessarily expected, it's not doesn't have all that much support behind it, it could be a great opportunity to get short and perhaps hold it for several days or even a week or two. You kind of get this full movement here back down to the other side of that Bollinger Band, which happens quite a bit. And obviously always being aware that the market can continue in the direction you don't think it's going to keep going in. So always keep your safeties in place. Now, one other thing I do like to have a look at before I get into the live trading session is the other charts. So we've got a weekly chart here. We're above the all-time highs, kind of still in the same area as previous weeks. We haven't gapped or anything like that. There's nothing significant in terms of a Bollinger Band that's going to be getting hit as far as I can see in terms of the levels. So we'll drop down to a daily. So if, for example, the Bollinger Band, if on the day, like today, we came up and touched the R3, it would almost be outside of that Bollinger Band, providing it didn't expand further out. So you would have a bit of an additional influence that you've hit a indicator, the Bollinger Band, and you'd perhaps be hoping for a retracement back the other way. So kind of like what's happened down here, it's gone outside the Bollinger Band and it's turned back around for several days. Now, to the downside, it's too far away for anything to sort of affect that Bollinger Band unless we get a crazy down day. 4 hour, again, the Bollinger Band in a similar position, so the R3, tapping that could be a really good indicator to get short, because we're hitting the extremities and we're running into a level, and on the daily it's a similar setup. So we'll check out the 1 hour now as well. So on the 1 hour, the Bollinger Band, we're just trying to see where it's kind of sitting. So if we did come down, we've got the lower Bollinger Band here, we've got the S1 breakout short. Could be a good spot to get long, just remembering that we are potentially looking for a reason to get short and hold it as a swing trade, because the market is hitting around those all-time highs. It's kind of almost touching the Bollinger Band on the larger time frame on the end of day data. So just trying to go in line with the longer term flow, understanding where the Bollinger Bands are sitting, so other traders, what will they be looking to enter on, and combining that with your pivot levels as well. So for example, upper, it's the R1. Ideally, I'd want to see it go beyond the R1 before I got in, just because it's very spaced out. Probably have to have quite a big stop loss, and potentially it could go all the way up to the R3. So you don't want to get in here, get stopped out, and then it goes all the way up here, and then, it's just not really worthwhile for me anyway. To the downside though, you've got the 1 hour, could be an opportunity to get long. So you're just building a bias, building an understanding of what other traders might be looking for, what the charts are saying. Because if you have a look at charts and you say, on hindsight, this would have been a perfect setup, don't give yourself that excuse of hindsight. If you analyze your charts, analyze the markets, have a look at a range of different situations for both long and short, then you're removing a lot of biases and you won't have as many issues in terms of looking for hindsight, because you already see what the charts are trying to tell you based on the information you have. So you're removing that element of having a look back and be like, I should have got on that, missed out. So that's it from me, guys. I just wanted to take you through how I kind of set up for the day and analyze the markets. Hopefully you got something new out of today. All the best with your trading, and good luck with the session.